Welcome to Illuminati Silver's Inner Sanctum, where we tell you the truth about precious metals, banking, economics, and politics. Today is Friday, the 4th of January 2019, and at the beginning of each month, we propose to produce a podcast for you, our Inner Sanctum members, on our perspective for the coming month, what we shall be watching out for, and any concerns or opportunities that we believe we should all be aware of. This month is an important one in our view for setting the trend for the year. The US has a new Democrat-controlled House of Representatives, which will be determined to keep the president in check and to scrutinize his tweets, words, and deeds. They will also resume investigations into Russia, alleged White House corruption, and will work with the president while at the same time look at ways to undermine him, with a view to his losing the next presidential election in 2020. Unfortunately, that's politics. The stock markets have taken quite a hammering these past couple of months, and even yesterday the Dow fell some 660 points to 22,686. Some of this is caused by the underperformance and concerns over Apple stock and the plateau forecast for the iPhone market. Some of this is predicated on the growing concerns of world trade and the lower forecasts for GDP in a considerable number of countries, not least of which being China. Perhaps the greatest reason for yesterday's fall was most likely to have been the ISM manufacturing data, where the ISM manufacturing index fell to 54.1 in December, its lowest level since November 2016, whereas economists polled by Refinitiv expected the index to slip only to 57.9 in December, down from 59.3 in November, thereby further enhancing the concerns over trade growth. And this decline in manufacturing suggests that perhaps President Trump's policies may not be working as effectively after all. So perhaps we can expect even further stock market declines, but frankly, we would only start to show some serious concern should the Dow fall below 21,000. At present, we are content with the correction, as we have been saying that a fall of this magnitude was necessary for some time. The Fed is the third area for concern. As we predicted, the Fed raised interest rates in December, which we felt it had to. But this now gives it much more flexibility to be data dependent in 2019. What spooked the markets in our view was more an issue of Jerome Powell's communication skills rather than Fed policy. Powell seemed to suggest that interest rates would continue to rise next year regardless, and then once those rises occurred, the Fed would be more data dependent. Now we have no doubt that is their desire, as from a monetary tool point of view, interest rate controls can be quite effective. However, other Fed board members are more supportive of that being a desire, but the actual actions being data dependent. In other words, the last thing the Fed really wants is to raise interest rates when there's benign inflation and growth collapsing. So we would not be surprised to hear Powell be somewhat more conciliatory in future announcements. Later today, we shall hear the non-farm payroll report, which we suspect will be quite good. But if it isn't, then we can expect to see the dollar fall a little further. It already fell 0.51 points yesterday to rest at 96.30. And unsurprisingly, this has proven positive for gold and silver, which has seen gold rise to $12.95 and silver to $15.75. We have said for some 2 weeks or so that gold will breach that 1,300 level, and we believe that it will, and that silver would break up to $15.50, where frankly we expected it to settle and perhaps consolidate slightly below. But we did add that if it does break above this level, then $16 is on the cards and the next serious resistance level. And none of us should be surprised if markets try and achieve that goal. That said, though, our financial assessment is that whatever rises are achieved in January and early Feb may indeed be clawed back in the second and third quarter of the year, as a number of the economic and geopolitical concerns are put to bed, and President Trump attempts to embark on infrastructure investments in order to buoy up the economy in time for the 2020 presidential elections. We are still not ruling out at this stage a fallback in gold down to the 1200 level and silver early 14s, unless we witness some serious political and economic decisions by the Trump administration and/or the Fed. But the signs right now, and certainly for January, are a positive momentum for these metals. Our view at present is that the fear factor has taken hold and is being overdone. No serious economist is predicting a world recession per se, but they are predicting lower growth, though emerging markets, loosely defined, are in a world of hurt, and the UK Brexit negotiations are not going well. Once again, the US government, in particular, can buy itself out of this problem by adopting major infrastructure spending. Now, we know that many of our members will say that the level of government debt is unsustainable. Let us be clear. We are no fans of high levels of government debt. Our very essence is based on prudence and what Margaret Thatcher called sound money, even though some of us worked in the banking profession. However, despite our preference, many will be surprised to hear that the US can in fact cope with at least another $5 trillion of debt before it becoming a very serious problem. Yes, a national debt of $27 trillion is still manageable. Not preferred, but manageable. What has to be looked at more concerningly is the level of high-yielding corporate debt, especially as stock markets fall, and we shall deal with this particular subject in another podcast. So this month, we believe Trump will hold out for the wall funding as long as he can, but a deal will eventually be reached. An agreement with China will occur, and we estimate by end of January, and Trump will assuage the North Korean issue. If he is not too preoccupied with lawyers and Mueller, his advisors will be working hard to encourage more public spending, but on infrastructure projects to keep economic growth moving. And we shall see a demise of tariffs. Whether this will all be achieved in January, we're not certain, but they will be a priority, as Trump needs to make some political and economic gains soon, as markets are too shaky for comfort. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we're not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.